Hi, welcome back to another edition of Lippers Fund Flows Insight. My name is Tom Rosine. Thanks for joining me today. I'll be reporting flows for the week ended Wednesday, July 22nd, 2015. Initially, we'll talk about mutual funds, but we'll be talking about ETFs as well. But let me tell you, we saw about $20.9 billion come into the conventional fund business this week. And this is the second week in three that we've actually seen net inflows. And this was on the back of some kind of mixed news. You know, initially we heard some good news out of Greece that they had a kind of a quasi deal created, and there was a $7 billion bridge loan that was added in there. I think that really kind of lifted the markets up, took a little bit of the unknown away. But then turned out that before that, we actually saw some really good earnings reports from Google as well, which sent the NASDAQ to new highs. But later on in the week, we actually heard some discouraging news on the earnings reports front. We saw Microsoft, Apple, and also United Technology all report lower than expected earnings, and this kind of put a damper on things towards the week's end. So again, we had some mixed news. But again, it was kind of the same general trading pattern that we've seen, kind of sideways, a little bit up in the beginning of the week, but then down in the latter portion of the week. So let's see how that news actually broke through to flows for the conventional fund business originally. Let's go ahead and take a look at our macro groups. Equity funds took in about $600 million net new money. There's quite a story behind that one, though. It's not how it's actually seen. We've had some pretty big negative numbers on the domestic side. We'll talk about that more later. Taxable bond funds saw about $1.4 billion in net new money coming to their coffers. Muni bond funds saw about $17 million, but it was positive, first positive we've seen in many weeks. And money market funds took in a lion's share, saw about $18.9 billion coming there. And this is certainly on the heels of the news that I've been talking about. You know, certainly we had no resolution in China, we had no resolution in Greece, and these type of things have been kind of hovering over the markets for quite some time. And so I think people decided to sit on the sidelines to watch out to see really what happened. Let's take a look at equity funds, though, to see how it broke out. We saw about a 0.09% negative return. This is the third week in four that we've seen negative returns, but it's almost nothing. Again, about $600 million into their coffers at equity funds, and it's about second week in three we've seen net new money come into the coffers. Again, just the low amount of money, though, is kind of the surprising part about it. Domestic equity funds, though, as I was saying, actually saw some negative outflows. We saw about 0.9 or about $900 million of money leave the coffers of domestic, but on the flip side, and this is the second week in three as well, we've seen that on the non-domestic side, we saw about $1.5 billion net new money come in, 15th week in 16 that we've seen money come into the group. And this is what's kind of amazing about that figure, is that when we take a look at these numbers, really we're still dealing with Greece, we're still dealing with China, we're still dealing with, you know, kind of those global issues that have been hovering over us, and people still seem to be saying ho-hum to that. How it broke out, though, if we take a detailed look at the large cap group and equity income fund groups, they all saw money outflows, about $700 million from the large cap funds, about $600 million from the equity income funds. On the flip side, though, we saw global funds actually taking a lower amount than they've been taking in, so people were kind of getting away from the U.S. story. But we saw international equity funds taking about $1.4 billion, and again, global only took in about $26 million. That's a flip from what we've seen over the last several weeks. Let's take a look at, though, what happened in the ETF community. It's a little bit different story. First week in three that we've seen outflows, we saw about let's call it $2 billion of outflows happen. Power shares QQQ, after I told you NASDAQ did very well, actually took in the biggest load. About $1.9 billion came into their coffers. Financial Select Services Spider Fund took about $700 million. And if we look at the bottom, Spider S&P 500, usually when things are not going all that well, $4.2 billion in outflows. And the small caps, the iShares Russell 2000 saw about $1.5 billion leave their coffers for the week as well. And that would bring us to the fixed income area, and this is where we actually started seeing some inflows again. So the fixed income for the third consecutive week, we saw $1.4 billion come to their coffers. It's the third week in four, though, that they've had negative returns, this time to the tune of about 0.2%, so just 20 basis points as far as losses go. But again, it was, you know, a losing week, but we saw money come into that area, and again, this might be that kind of safety play that people were talking about. However, we saw for the second week in three, corporate investment grade debt funds take in largest amount of money, about $600 million, and that was followed by flexible portfolio funds, which took in about $400 million. This is a 26th consecutive week. That group has actually seen money come into their coffers, and as we take a look at this and and where we're taking kind of a breakdown of it, international and global debt actually saw the biggest outflows. So this is a flip from equity funds. When we take a look at the fixed income, again, it was only to the tune of about $186 million, so it really was nothing. And government treasuries actually saw outflows as well. So isn't that odd? People have a little bit of flight to safety, and it turns out that the area that equities were really kind of bolsterous in, going into the international and global departments on the fixed income side, they didn't do that. And then on the treasury side, didn't look for safety at all. In fact, it was the only two groups that saw outflows for the week this time around. Let's go ahead and take a look at ETF funds. The ETF community, the ETPs, basically saw about $1.9 billion in inflows. Third consecutive week they've seen inflows on the fixed income side. And at the top of the group was the iShares 1 to 3 Treasury bond ETF, so about $400 million in net new money. iShares iBox high yield. So again, kind of that confusing area. Saw about $400 about $400 million of net new money coming to their group. And again, this is kind of weird. So you see a 1 to 3 Treasury, and then you see high yield bonds. So again, even on the authorized participant level, there was some confusion on what's going on. At the bottom of the group, we saw Spider Barclay high yield fund lose about $400 million. So really, there was no rhyme or reason to the fixed income community. Let's now take a look at one of the areas that actually saw some inflows. My cohort, Jeff Turnhoy, actually predicted this, that he thought we'd start seeing some money. That's some of this, even though Puerto Rico's just come into its light again, that they're going to default. It certainly, he said, hey, listen, it's just about over. We're going to start seeing inflows as the day turns into night and night turns into day. Basically, we saw munis come in there. $17 million, that was it as far as net new money coming in. It's the first week in 12, however, that they've seen net new money come into their coffers, and it's second week in 3 that we've seen plus side returns, this time to the tune of 0.18% or 18 basis points. National munis actually took in a lot more, took in $60 million, and that means the single state munis actually were the culprits as far as losing money. This is the second week in a row that we've actually seen net new money come into the national muni community. Well, let's take a look now at our money market group, and this is where we saw big inflows, and we've been seeing kind of big in and out as people either make big bets or start running for the hills. This time, for the fourth week in 5, we saw about $18.9 billion for this week come into the coffers. Taxable money market funds took in $19.8. That means the tax-exempt money market saw some money leave, about $900 million. How the money market funds, though, non-taxable, the taxable money market funds broke out as about $18.3 billion went into institutional money, and then about $1.5 billion went into the normal money market funds. So both on both sides of the fence, whether it was institutional money or the retail investor, all saw inflows into the taxable money market community. Well, that brings us to the end of this conversation, and really it just raises some new interest. June single-family housing came in about 6.8% lower than expected. However, we heard that the initial jobless claims were the lowest since 1973, so I think investors have got some kind of decision-making time to do. It looks like they're, again, getting away from the domestic side of the equity markets here in the United States, still padding the coffers of the internationals. Still a little confused on the fixed income side, considering we had both the central banks from the UK and the United States say, hey, listen, we are going to raise interest rates. So I think that's kind of put a little bit of a damper on all the money that's been flowing into fixed income funds. But for how long? Again, is there another flight for safety around the corner, or is this certainly when people are going to start saying, hey, listen, it is time to go back into equities, start to go into risky assets, and trying to avoid some of the interest rate sensitive type of plays out there? Well, we certainly won't know that until the week's over again. So why don't you join us next week, where one of our analysts will be able to tell you a little bit about fund flows for the week, or you could join us at our www.lipperusfundflows.com and maybe do a deeper dive into your area of interest. Again, if not, join one of our analysts next week when they'll talk to you about the flows. Thanks for joining me. My name is Tom Rosine, and wishing you the best in your wealth planning and creation.